Hey everybody, it's Brian Shannon from alphatrends.net. Today's Friday. What is this? The 6th of October, and we had a big day in the market today. You can see that we were up a couple percent. The bigger news was that it came in off of a gap lower, so a lot bigger range than actually the percent change. But we are positive for the week, which is good in the S&P and the NASDAQ. Russell 2000 still a dog and down year to date, 15% off its highs. The bonds finished with a loss today as well, down 30% from their highs. So let's take a look at these charts and make some sense of it. The S&P 500, if you caught my midday outlook, I was talking about, we were right here at this point, and I thought maybe, that is over on the right, I thought maybe we would be able to pull back a little bit down towards that 5-day moving average, then continue to move higher. Instead, of course, the market just rallied strong here. And when we look at a 5-minute chart and today's volume weighted average price, again, we saw this big gap lower, and then as the buyers regain control back above the daily volume weighted average price, they maintain that control throughout the session. So going forward, I'm going to keep an eye on the anchor from this low here, and hopefully on Monday we can kind of pull back down in towards this area and maybe do something like this, get that 5-day moving average to catch up to it, and then perhaps we have a lower risk entry. The other option is we break beyond this range and then start to pull back a little bit. I think that's probably more likely, but I'll be keeping an eye on this anchor point as a potential level where buyers emerge. So you got to be impressed with the daily action here today. Again, let's go back to those 2 time frames. And looking at the daily time frame, we really never got a touch of that 200-day moving average or the year-to-date anchor, which I thought we were going to see. I thought it was actually possible we were going to continue down to the 38.2% retracement, if you recall, from this 2022 low up to the 2023 high. So, heading into next week, here's where we are. We're still below a declining 20-day moving average. We're below a declining 50-day moving average. That makes it a little bit suspect. So again, the preferred scenario is always not to chase these types of moves, which incidentally ran right up to the anchor from that last failed breakout over there. And that's where we saw a little bit of profit taking at the end of the day. Again, I'd like to see a little bit of backing and filling and then perhaps continue to move higher up towards this anchor, which is from this peak, which is right there on the daily time frame, and take it one step at a time, because then that puts us in this area where we had prior support. So that 20-day moving average, I think for 35-ish, looks reasonable if this market can continue to show some strength. That's the big if. The NASDAQ has behaved much better, obviously, and this market made it well past that 5-day moving average. Again, I was hoping that we could see a pullback in this area. Instead, obviously, I think a lot of short sellers were caught in this market, and then some FOMO buying from sidelines cash, which again, if you're trading on the very short term, that is the day trade, we were above the daily volume weighted average price all day. So there certainly wasn't a reason to sell it short. And I did trade some long in here, but I didn't hold it because I just don't trust it still. That's my view of this market on the daily time frame. Again, there's that 20-day moving average and the 50 just overhead for the NASDAQ. Perhaps we head up towards that level, up towards 368, 369 before this market really experiences a pullback. But if we do, what I'll be looking for is this to be the level that it finds buyers. If we pull back in here, that this prior resistance hopefully become enough support to create a higher low, and then buying somewhere along in this area with a stop underneath whatever this higher low might end up being. The Russell 2000 got a little bit of relief here today. But again, still down on the week. This is where we finished last week. This line was exactly where we were 5 days ago. So that's where we finished last week. We still have a declining 5-day moving average for the Russell 2000. And we are, as we've mentioned, down at the low end of the recent range for the year, that is. 168 to 170 is that level we've been finding buyers. And if this market maybe in a couple days can pull back and then see that 5-day moving average flatten out, then perhaps it gets a more sustainable bounce. But I think you're better off with things such as the NASDAQ or even the semiconductors, which I was on Thursday, I was short the semiconductors. I covered 2/3 of it right here, and then I covered the rest of it towards the end of the day. As I mentioned in the midday video, I thought that it was a mistake to have covered there because we had that open lower, but the buyers quickly stepped in this market as well. Let's look at that on the 5-minute time frame. Buyers took control right here, and that said the buyers are back in control for the day. That's where it would have made sense, but I didn't do it to get long and set a stop under here. Otherwise, you look for strength after these little pullbacks for your entries on the long side when we get a strong trend flip like this. Same story. I was looking for the semiconductors to hopefully find supply at this anchor and pull back. Instead, what we'll be looking for next week is for it to pull down and find buyers somewhere in this 146.5, 147 level. If it can find buyers in there, perhaps that's the higher low that it builds enough energy to assault this 50-day moving average, move through that, and continue to maybe show a strong fourth quarter. You've got to be open-minded for anything. Even in the biotechs, you've got to be open-minded that they can reverse. I don't think this is the sign of a reversal. It's a nice move up the last 2.5 days. But we're still up against this prior little level that we broke down from. So maybe if we build a higher low, then this market can push and build some energy to break up towards this level maybe. But again, the biotechs are really some of the worst performers in here. And I'm not a bottom fisher, so I'm not interested in that. I'm interested in trend trades and that, you know, the primary trend below declining 20, 50, 200-day moving average, etc. The primary trend is still lower. Financials had a good little shakeout here and finished with a slight gain for the week, or did they? I don't even remember. Let's take a look at that together. Financials for the week, no, they were down 0.5 percentage point. Year to date, they're down 3.5%. And let's go back and take a look at that chart. So we've still got the same thing, declining 20, declining 50, declining 200-day moving average. If they don't scare you out, they'll wear you out. And this market is going to have to pull back and build a higher low if it's going to sustain any rally as well. Same with energy names. Energy names came right down to the 200-day moving average in the year-to-date anchored volume-weighted average price. If we take a look at oil on this daily time frame, that goes up to the high from last year, and the anchor from that high is right here, along with the anchor from this most recent move. So this sure seems like a level, 82.77 is where we finished up in crude, that it should find some buyers. If we start to see support in here, then I think that translates to support also for the energy stocks in this area. But right now, the momentum continues to be lower in the energy names, so I wouldn't be looking to buy those until we can see some repair to this damage that's been done recently. So, you know, going into next week is more neutral on the daily time frame. Bullish here on the intermediate. Like to see that pullback and then perhaps continue to move higher.